What's up, Nick Frumkin? Welcome back, everybody, to the insurance panel. We are a week away from AEP, open enrollment. What's it called again, Nick? You always correct me.
It's AEP, but your
clients know it as.
Well, yeah, and you're probably not going to be seeing this video until November at some point. So,
True.
it's just the way that it goes. We keep recording them. The log jam is in the getting them edited and titled and thumbnailed and uploaded. Happens.
So it's actually not our fault this time.
It's not. No, we've hired somebody else to do this, but there's a log jam because they actually have other jobs.
They're life too.
They're doing other stuff.
We definitely don't pay them enough to do this full time, and we don't get paid anything to do this full time. So we do it as a hobby. We do it for you guys. So you hate reduced paid ups. He's muted. Hang on. There's a dog or something.
Yeah. I hate my dog barking at the mailman. When somebody delivers a package from Amazon or something, my dogs go freaking nuts.
You said dogs or dog?
Dogs.
I only have the one.
No, I've got two. I got 2 dogs and 2 cats. They've all made appearances on the show at some point.
Wow. Can anybody go back and find each appearance of Nick's animals? I don't think I can only remember the one that was sitting back and he's like so goofy.
Yeah.
It's the gray one or the darker color one. That is the funniest one to me, and that's what I'll consider your dog. So so before the dog came up, Nick hates reduced paid up. Just kidding. He doesn't hate him, right? But
I don't think final expense agents should be using it. And it gets taught to final expense agents, especially new final expense agents, all the time as like this crazy trick to help you increase your replacement percentage. It's a bad idea. I used to agree that it was this great trick to help increase your replacement
correct, which is why I wanted to talk about it, because you said it in the chat that we had, and I was like, because he used to do reduced paid up, not quite a bit, but it was a very, and I still think it's a viable option, but I kind of want to hear why you think it's not as viable as an option as it was, say, 3 years ago.
Yeah. So here's a thing that happened recently, and it's not the only time that this has happened, but it's kind of a thing that happened recently that's kind of put this on top.
Pause.
Yes.
People that might be watching this, RPU, what the heck is an RPU? Can you give them a 14-second synopsis of what RPU is?
We should not assume that everybody knows what we're talking about all the time. So reduced paid up insurance, right? If you have a cash value insurance policy, most companies, not all, but most, will let you at some point in your life take that cash value and purchase a single premium life insurance policy with it for a smaller face amount than your original policy. So for example, you've got $3,000 of cash value in a $50,000 policy, and you're 65 years old, and you go to the insurance company and say, hey, I'm tired of paying for this insurance policy. Can I have my policy paid off? And they'll say, sure, at your age, we can give you a $7,000 policy that's paid up. So it's a reduced face amount and it's paid up. You don't make payments on it anymore. It's good for the rest of your life.
Yeah.
Reduced paid up.
Reduced paid up.
So let's talk about how people get trained to use reduced paid up before we talk about why I think it's a bad idea.
Okay.
Because it's a really viable replacement strategy, right? It works very well as a replacement strategy.
Yes.
Assuming that you are able to make the client believe that this is a thing that really exists. It's helpful if the insurance company places reduced paid up values in their cash value tables. Some do, some don't. Also, not every company offers reduced paid up. Some companies.
I did not know, and I think they'd be perfectly fine. American Amco does not.
Yeah, neither does Oxford.
Do it. Yeah, neither does Oxford. Yeah, I didn't know that.
And they are also sometimes you can list reduced paid up as the default non-forfeiture option. So if like a client lapses policy, so like AARP's New York Life policies. If a client lapses a New York Life policy from AARP, the default non-forfeiture option is reduced paid up. Should we edit?
Do not pause. Sorry, I was sneezing and coughing at the same time, so don't. I just did not want to do this.
We're just a professional podcast.
Yeah.
So sometimes it's a default non-forfeiture option. It is almost always an option that you can select as a non-forfeiture option when you're setting up a policy, again, unless the company doesn't offer it, along with extended term or automatic premium loans.
I do not like extended term
No,
for final expense policies. Like, I had it out with an agent that was saying that it was the best option for a client. And maybe we can go to a different topic on that one day. But I was like, there's no way that this is a good idea for the client.
I think if you are selling final expense, I guess correct isn't really the strongest, the best, most beneficial choice is automatic premium. If your client takes automatic premium loans at some point, it might cause them problems down the line, but short term, they won't lapse their policy, right?
Correct.
If they keep a policy for a couple of years and a disaster strikes and they miss a payment, well, their policy's alive. You got room to play with. You got time to make it up. They can pay back the loan a buck a day for the rest of their lives and get the loan paid back off or whatever,
Right.
It's way easier to have a policy stay alive via automatic premium loans than it is to try and like reinstate a policy and like
right. You got to catch up 3 payments of $195. Like,
no good.
Yeah,
no good. And if you want to build a renewal base with your final expense, which you should, automatic premium loans are the way to go. It's better for you. It's better for the client. Better for the company. It's the 3-legged stool that companies love talking about. It's better for everybody.
Yeah.
But reduced paid up is often used by agents as a replacement tool. And by me, I've used it a lot. This is the reason why I don't like it anymore, is because I've used it a lot. Here's the thing about final expense clients. Final expense clients don't often know what insurance they have.
Correct. But they do for sure, but they have really no idea.
Right.
Meaning they will tell you, I know exactly what I have,
right.
But they don't really know what they have.
Right. And a lot of times they don't keep very good records of what they have.
No.
And so a lot of times the only way that their kids ever even know they had life insurance is after they die, they look on their bank statements and see, hey, mom was paying $50 a month to this insurance company. What the heck was that for?
Yes.
And that's when the kids know to file a claim.
Yes.
Right. So here's 2 stories that happened to me reasonably recently, within the last 18 months. Okay. Sorry. Before I tell these stories, I will get to telling these stories. We should talk about how the replacement strategy. So the replacement strategy is you go and see a person who's got a 5 or 6 year old policy. They've had it for a long time. It's a whole life policy. You can't beat the rate. You can't say you go to Mildred and say, Mildred, you've got a $10,000 policy and it's $50 a month, and for that same premium that you've got right now, we can only get you $8,000 of coverage. Do you want to add on to your coverage instead of replacing it? Right.
Right.
And that's tough, right. That
is a tough sell. Yeah. Yeah.
And so what a lot of agents will do,
what they've been taught
to do, and what gets taught a lot. And what got me thinking about this was somebody posted a training on Facebook about this the other day. You got a lot of background noise.
That's why I'm flipping it up and back. That's why I normally record from my house.
Yeah. Gonna mute you while I talk. I will unmute you in a second. So what a lot of agents will get trained to do is they will get trained to say, hey, Mildred, what we can do here is you've got $3,000 of cash value in this life insurance policy. And what company A is going to do for you is they're going to pay off and they're going to give you for free a $6,000 policy because you've got all this cash in this life insurance policy. And then for the same premium as what you're paying now, we can give you an extra $8,000 on top of that $6,000 of free life insurance for the rest of your life. And now, haha, you've got way more than the $10,000 of life insurance that you have.
You've got $14,000.
You've got $14,000. That's $4,000 of extra life insurance I just got you for free. And Mildred goes, well, if it's free, it's for me. I'll take $4,000 of extra life insurance. And you say, great, I'm going to write you up. Right? Sounds good. Mildred does have $4,000 of extra life insurance. Her original policy is non-contestable. Right? She's got $6,000 guaranteed, never going to go away, going to last for the rest of her life. When she dies, it will pay if somebody files a claim. Never going to go away. She can't lose it.
See where you're going here.
Yeah. So it seems like a really good idea. And when I was a brand new agent, I was a big fan of this idea. I don't even remember who taught it to me. I know I knew it before I went independent, but I don't remember how. I've known this strategy for such a long time. I literally don't remember why I know it. But here's the thing with final expense clients. Someday you're going to get a call about a death claim from somebody's wife. And she's going to say, hey, my husband Henry just passed away. Can you help me fill out the claim? And you're going to go over and say, sure, let me go help you fill out the claim, Mildred. And you're going to sit down and you're going to look at your notes and you're going to see that not only did Henry have a policy that he purchased from you, he also had a reduced paid up policy because you'd reduced paid up an old 5-star life policy from forever ago that he took out in 2012. And Mildred has thrown away that paperwork because they weren't making payments on it anymore. And she didn't think she needed it anymore. And she didn't think she had that policy anymore. And isn't she lucky that you came by and let her know that she didn't just have $8,000 of life insurance, she had $14,000 of life insurance. And you're going to feel really great, right? Until you realize that you get called to fill out a claim once a year, maybe.
Agents just don't keep good records.
Right? I mean, let's assume you keep great records. You're not going to know every claim that gets filed. You're not always going to know until it's long past.
No.
You know, especially if it's a non-contestable claim. I get claimed. I have a book of business of thousands of people, many of whom were in their 70s and 80s when I sold them policies 8 years ago. People are dying on my book, you know? They were not in good health, right? They were not in good health when they purchased these policies, right? So yes, if you make a note to yourself to check every couple of years on your final expense clients, that you remind them that they've got that reduced paid up policy.
It's awesome.
Yeah.
But God, I see where you're going with this. Like it's actually so true what you're saying. Is like most people use it as a sales tool, but they don't realize that
real people on the other end of that.
That there's real people, and there has to be a claim made on that life. They have to take that certificate. I think they call it a certificate, like a certificate of. And I've seen one where it's like it's almost like just a piece of paper. It's like reduced paid up or paid up insurance policy.
Yep.
Worth $6,482, and it's there and it's good.
Yeah.
And people move. People have cleaners come over. People look in a box, and it's a bunch of old stuff, and that's where that's shoved into, and they take the majority of it and then throw it away.
Yeah. Think to yourself as an agent, how many times have you been in somebody's house and asked them, who do they have for their life insurance? Hey, go get me your policy. Oh, I lost it when I moved. I don't know where that is. I can't find it. It's somewhere. Right?
So what are you doing? You're finding the bank statements. Mm-hmm. You're looking on the bank statements, and you understand the code that TRANS is Transamerica, and you're calling 1-800-PYRAMID, right?
Right. Waiting 3 days.
Waiting 3 days. And you're going through all the steps, but I couldn't tell you the number of clients I've actually seen that have a reduced paid up. Or
Right.
they probably have one. They probably had a client come by, or an agent come by and do this,
Maybe.
but they lost it. No clients ever, I sat down with the client and they go, yeah, Nick came by, did a reduced paid up on me. I got 4,000 here and 8,000 here. So I've got $12,000.
Mhm.
That's a really good point.
Yeah. Here's the other thing that can happen. Story number 2. Real thing that happened to me.
Okay.
Again, spouse of one of my clients died. I wrote this person a long time ago. I kept reasonably good records, but thank God I did. Spouse of one of my clients died. I had done a reduced paid up from one of the credit unions. And when I met them, they had, from the credit union, a term life policy for $50,000, an accident only policy for $150,000, and a whole life policy for $10,000. The term life policy expired about 2 months before I met them. It was the reason why they sent the card in. I made a note of that. I had it in my notes. Oh, this is good. The accident only policy costs them $5 a month. My recommendation with everybody that has an accident only policy is, I don't care. Keep it, don't keep it. I don't think it's worth your money, but I'm not going to tell you to get rid of it.
Yeah.
Do whatever you want.
In the off chance that something happens to you, great. I mean, if something crazy happened to you, your family's going to create a lot of money, but the chances are it's not going to pay out. It's a forever lottery ticket that's going to be in your back pocket for a long time.
Right. And then I did a reduced paid up on the $10,000 policy and got them an additional $10,000 policy. I was able to replace it with a policy of the same value for the same dollar amount, plus the reduced paid up. Great. Win-win. It was great. It was good for everybody, right? Until, her husband dies. And I get a call from the insurance company that I wrote saying, this wife is filing a complaint against you. She told us, you told her that she was going to have $150,000 of life insurance when she died, instead of $15,000 of life insurance, which is what she had.
Right.
And the insurance company explained to her what happened. I explained to her what happened. She filed a complaint with the Department of Insurance. The Department of Insurance investigated. The Department of Insurance explained to her what happened, because I had notes and I took care of things and I documented things like you're supposed to. And it was not a big deal. It caused me a ton of stress, like freaked me right the heck out.
Oh, the first time I ever got one of those, I was so underwater, and it was such a not big deal. You just have to understand that the Department of Insurance has to do something when they get a complaint. They're not attacking you. It's funny because you got a background noise. They're not. I want to go over this. They are not attacking you. When you get an email saying complaint filed on Matthew Murray from this person, it does not mean that the Department of Insurance is trying to ruin your license. It just means that client is either being driven by another insurance agent, or they really don't understand what's going on. And the Department of Insurance has to do something. They can't just put it on the desk. They are a huge state government agency and they have to do it. So when they're coming at you and asking for reports, they're not coming at you when they're asking for reports. It is good to be like Nick and have good follow-up, good documentation, and explain what happened during that, because the 3 times this happened to me, I've done the same thing, and I didn't even hear back. It just went away. Like nothing ever happened with it.
Right.
So,
yeah. That's no news is good news.
Exactly. Yeah.
But what this lady didn't understand is it had been 7 years since I had visited them. And all she knew was she had 1 policy from me and 3 policies from this other company. And I had told her she was going to have more insurance with me than she had with this other company. That was all she remembered. And she was like, well, I should have hundreds of thousands of dollars of life insurance. I was well taken care of. My husband did the right thing by me. He left me hundreds of thousands of dollars of life insurance. Why am I only getting $10,000? And honestly, from her perspective, I get it. You know, I like, she's not an insurance expert. She doesn't understand this sort of thing. She should understand this sort of thing, but she doesn't. And you know what? We sell final expense. Most people don't want to do an annual review on final expense, right?
Of course not, because it's the final expense.
Yeah.
You really shouldn't. Maybe I'm wrong on this. You really shouldn't have to review final expense other than maybe a 2 to 3 year follow-up saying, hey, great news, you're past your contestability period.
Yeah.
There's no reason ever that you should touch this policy at this point.
Right.
Or, you know what I mean? Like,
it's meant to be a lifetime. It's meant to be a set it and forget it lifetime.
Exactly. So you really shouldn't review those policies, but you should at least follow up with your clients and say, how is everything going? Do you need more insurance than you needed 3 to 5 years ago or last year? Or do you have anybody, any new grandbabies that you want to insure today? You know, those are good things to do, but not saying, let's take out your American Amicable policies that I sold you last year. Oh, it looks like it's the exact same premium as it was and the exact same face amount as it was last year. Great news.
Nothing's really going to change.
And how do you think it's going to turn out when you go, oh, cool, you've got $396 in cash value in here from it built up. Cool, I want to take that out. No, you don't. If you bring that up, they're going to want it, right? So definitely what I'm saying to the eyes of everybody is you should always do reviews on your life insurance policies, but final expense policies are not deemed to need reviews.
Right. You know, and so like, I mean, I send my clients a letter every year being like, hey, I'm your insurance agent. Don't forget about me. You know, this is what, you know, like, I don't even do like, this is what you have. If you have questions about your policy, let me know. And most of those letters probably go in the trash. You know, those are sent out mostly to just drum up new business for me, honestly. You know, they're not, I mean, like, it's a small whole life final expense policy. It is exactly what it says on the tin. It lasts the rest of your life. And price, nothing ever changes on it. You know, unless you need more, there's really not a reason to do it. So those are situations that have come up within the last 18 months that have made me reconsider my position on final expense, on reduced paid up. On the positive side, here's the other thing that you have to remember about final expense clients. Most of them would rather have $3,000 of cash and maybe $1,000 less insurance than $4,000 more insurance.
1,000%. 1,000% of the time.
Yeah.
Like, if you say, I've got 3 options for you. You can keep your current policy. You can get $5,000 more. It's going to increase your budget by $30. We can do what's considered a reduced paid up. It's called a reduced paid up. I can get you a total of $15,000. It'll only cost you $11 more than what you're currently paying. Okay, you'll get the same $15,000. It's only going to cost you, instead of $30, it's going to cost you $11. Or I can keep the same amount of coverage that you have, $10,000. Or I can give you $15,000 right now. It'll cost you $70 more than what you're currently paying. But you're going to get $2,500. Which one do you think most people will do? Do you want an increase of $11, get 15? You want an increase of $50, get 15? Or do you want an increase of $80, get 15, but you get $2,500?
They're taking 100%, 10 times out of 10, they're taking the $2,500. If you offer people their cash value back, they will 100% of the time take their cash value back. If there's more than $200, $200 difference. And if you're selling decent companies, I mean, you should be able to get them that $200 back and still replace the policy and still get them additional coverage. Like that's the mother load, right? but like, I don't know, I've got a client that I sat down with who had policies from, I don't even remember who they had them from, but they'd had them for like 10 years. They're like 10-year-old policies. People are in perfect health. And I sat down and I explained to them, like, listen, at your age, I don't think we can increase your coverage unless you want to spend more. And they said, well, I don't really want to spend more. And I said, well, okay, so the only thing I can do for you, we can get you the exact same amount of coverage for the amount of money that you're spending right now. And we can get you guys like $7,000 returned to you between the two of you. And they said, we can get $7,000? I said, yeah. And they said, shoot, we need to buy a new car. And I said, well, $7,000 makes a nice down payment on a new car. And they were like, we can buy a used car for $7,000. We don't need to make a car payment. And they said, let's do that. All right, $7,000.
Sure.
Only downside is you're restarting your contestability. They said, we're healthy, we don't care. Done.
Yeah. I mean, especially in this is, I again like to get insurance companies on the phone, and when you ask what the cash value is, and they tell you what the cash value is, and you say, okay, when they pass away, their family will get the $10,000 of death benefit, and they go, yes, and they will go, what will happen to the cash? And the company will say, nothing. And they say, well, my family get it. They will say, no. And they say, well, I get it. They will say, no. And they say, will the company keep it? And they say, no. And they say, well, what happens to my money? And the company says, well, it's part of your death benefit. It'll just be absolved. And they say, the company's going to keep my money. That's exactly what they'll say. And they say, how do I get that money? You say, no further questions, Your Honor, and you get off the phone.
Which is why it's so important to get them on the phone, right?
And this is I'm sorry,
every
no,
time.
you get off the phone then when they have that big red flag. You get off the phone, no further questions, Your Honor, and you hang up the phone and you look at them calm, and you go, what did we learn? And they will always say, 100 out of 100 times, they are going to keep my money. And you go, okay, you can get qualified for a new life insurance policy. And if you're qualified for a level benefit, and this is the important part, Ms. Jones, if you're qualified for a level benefit, it cannot be a 2-year contestability period. It cannot be a 2-year waiting period policy. It has to be a level benefit policy. You can get that cash if you qualify, and they will say, what do I need to do to qualify? And you say, go get your medicine bag, go grab your checkbook, and you need to make sure that I cross my T's and I dot my I's on this application. And they will get a magnifying glass and make sure that you're doing everything correctly. They will write the app for you as much as they can. And then they want to hear on the phone interview, approved or approved as applied. And then you go, you turn on, you go, you got approved for the preferred policy.
Let's go get you your money.
When this policy comes in the mail, I used to, when this policy comes in the mail and we review it, everything looks good, and we know it's all there, I'm going to write out this letter. We're going to go ahead and stop payment on the other one. Call them back. When this gets done, we can start the paperwork. Generally, it takes anywhere between 2 weeks to a month. But I have to say this, Ms. Jones, when this new policy comes in, you cannot do anything with this policy. This is about the last chance that you're going to get to do this ever.
Yeah.
Because of your age and because of your health. You're approved today, which is great. And you can get this. It's a new 2-year contestability period. Okay. And everything you told me is true. So you should be okay if something does happen to you. but they have a chance to contest it. But when this comes in, we can go through, we can get that cash for you. But this is the last chance. You do not want to lose this new policy. And that's how you lock down a lot of policies.
Yeah. Cash is king, you know?
Cash king.
And so there's a lot of stuff in there. Like you got to call the companies. Like it's so important to call the companies if you're going to try and do a replacement. Like looking at the policy, at the minimum, you have to look at the policy, but you got to call the companies. It's you know, you gotta make that happen. But it's just, you have to look at every prospect like they've got a big sticker on their forehead saying, "What's in it for me?" And it's just like, at the end of the day, the thing that they're going to be most excited about is getting a lot of money back. You know,
they're not most excited about, you know, buying an insurance policy and giving you a check for $97 a month.
No.
If you can walk out of there and they gave you a check for $97 a month and they're excited because they know they have a check coming back in the next couple of weeks for $2,500, they'll be your best friend in the world. I mean,
and that is the hardest part for people, for new agents to wrap their heads around. For agents who've been around a while, if you are not thinking about things this way, I think you will kind of intuitively start to feel like this is probably true. Kind of as we're talking about this, I think you'll kind of be nodding your heads, I hope. Maybe you'll tell us we're crazy, post about it in the comments if you think we're crazy. But that's why I don't tell anybody anymore that I think you should be doing a reduced paid up policy. I don't recommend them to people anymore. I don't even offer them to my clients anymore. It is too much of an opportunity for things to go wrong down the road. And then they don't get the cash back, which is a big deal to them. It just ends up working out better most of the way around. I don't sell a ton of single premiums anymore like I used to either. I used to sell a lot of small little single premiums. I like single premiums better than reduced paid up because at least you get a new policy in the mail and you're like, oh, this is my policy and I get it. You don't just get like a little half sheet saying your policy is now only.
Right.
But, I don't do as many of those either for the simple reason that people typically would rather just have the cash value back. You know, they would just rather get the cash.
And typically, I don't know, typically you can get more out of a reduced paid up than you can a single premium anyways. I've noticed.
Well,
noticed.
with the
It depends on the
options
company
that are available now.
Yeah.
That didn't used to be true. But,
correct.
There are a couple of companies that used to offer single premium that don't anymore, that especially for low face values.
Correct.
Used to be very generous, but
not as much anymore. Yeah. No, that they actually made a lot of really good points, and I'm not saying that I'm turned 100% to the no option of reduced paid up. I've used it many times. I still use it. I think the last time I was in the field, I used it. And it was a very good option at the time, but I also do know that I haven't followed up with that client from 4 months ago.
Yeah. Right.
And the chance of them, 7 years from now, when they pass away and they moved and things happen, the chance of them, my card still being there and all my stuff being all in one little tight package like I do it is going to be rare. It's going to be rare. I hope that it's there, and I hope that I'm, awesome and follow up. But heck, sometimes me and Nick have trouble scheduling to just get on a YouTube channel.
Right?
We're busy people.
We've got a lot of clients, and there's a lot of stuff going on in our lives. And listen, in an ideal world, you touch base with every single one of your clients every single year, no exceptions. You make sure they understand what they have their policy, but that's not realistic once you start getting thousands of clients.
But that's if you're filing expense client in realistic, that's perfect world. That's like old school insurance. And we did a thing called, what is the video we did with what's his name, debit agent?
Oh yeah, right. About the last debit agent working in America.
Yeah. Last debit agent ever. Right.
Yeah.
Right. He knows exactly what's going on with all his clients all the time. He follows with them all the time. He knows exactly what's going on.
Yeah.
Right. That is, if that was the only way you could do it, that would be a better option. But I know what you're saying. Like, you made some really good points, and that kind of like racked my brain, and I'm going to steal some of that stuff later on and use it in some of my content later.
Yeah.
But this kind of stuff doesn't get talked about a lot, and I think it should. And I don't know.
Yeah, because everybody wants to just make the sale and move on, right? And I
Correct.
get it. Like,
Correct.
I
And
get it.
do not take the snippet of what we just talked about being on the phone with the company and talking about the cash value, and think that you can just go make a ton more sales just by watching this one video. What we just kind of brushed over there was a sales method, so to speak. It is like years of training and years of doing it properly and not doing the wrong thing. Do not go watch this video and think that you can just start saying these things and it's going to work. It will not work. You need some super proper training. You need Nick and I to come train you, or your company. So I did there, Nick. Just oh, that was good. See, like, how about that end transition? That was good. No, that's a different topic for a different day. But you did brush on, reduced paid up and single premium. You don't do single premiums option anymore. But you know who does? Who's been on our show?
Yeah, sure.
Dusty Edwards.
Dusty Edwards. I think we mentioned bringing him back on the show on the last episode. Now, his approach to single premiums is radically different.
It's radically different, and it's wildly smart. And there's a lot of psychology. And I know your dog's barking, so I'll try to take over. But I have background noise anyways. This is going to be one of the most background noisy videos of all time. If Ryan can figure out how to make that go away, that's awesome. You're amazing. But Dusty's way of doing it is so left field, right? And he talked about how he gets in the doors when he came on the door with us about door knocking, right? But when he talks about single premium and how he does it and how he structures it, it's, again, wildly different than how most people are doing it. And I don't want you to watch the videos and think that you can recreate what he's doing. It is a system. It is a way of doing it. And if you can understand how to do it and get trained by somebody like Dusty or like Nick or like me, you can do these things. These videos are to start to teach you a little bit about really what is final expense. Really, what are the
stuff differently? Yeah,
just think about stuff differently and educate you on what's out there. I had a call with a guy that was being recruited by a big IMO, one of the most widely known right now for their online presence. Mm-hmm. And I stood on the phone with him for 5 minutes, and I mentioned roll-up debt because he was like, I'm a recruiting machine. And I said, have you thought about roll-up debt? And he goes, no, what's that? Ooh. And I explained it in 3 minutes. And he goes, I am scared to my bones about recruiting right now. And I said, and you should be. What you should do is, say it with me, Nick, buy leads.
Buy leads. Go see the people.
Go see the people, make a ton of money. And when you make a ton of money and you can show other people how to do those three things, that's when you can recruit. You do not recruit first. And so I guess what I'm trying to say is we're trying to just really teach you things that are not talked about often. And we're trying to teach you the most basic things. And we're trying to really just talk about the problems in our industry. And there are a lot of problems, and being sold or being told how to do reduced paid up the wrong way can get you and your client and the company in a lot of trouble. It's an upside down three-legged stool. Right. It's the worst thing for everybody, right? That's a good joke.
Yeah, I like that. Yeah, and if you're gonna do the reduced paid up, like, I mean, I'm not saying anybody else should not do it, right? This is not what I'm saying. This is me personally. I don't offer it as an option anymore, right. And I don't think you need to offer it as an option. But if you choose to offer it as an option, make sure you've got really good notes. Make sure you've recorded everything down. You're keeping good records. Make sure you reach out and touch base with your clients periodically to remind them that they've got that policy. And like, sometimes reaching out to your clients and touching base with them is a good thing, right? You know, it's not a terrible thing for them to remember that you exist and maybe you offer other services other than finance.
Just because you call your clients doesn't mean they're going to go, oh, the insurance guy, I got to cancel that. They're not going to do that.
Definitely.
That is a common thing that I hear a lot, Nick.
Yeah, no.
I didn't want to call my client because they might cancel.
Yeah.
And it was a big premium.
Yeah.
It's the worst idea you can have.
You gotta not be scared.
Yeah,
So,
it is your business. Handle it and you'll be fine. Guys, it's been wonderful. We're going to keep it short today. Y'all have a wonderful day. Post down in the comments what you think. Like, comment, subscribe. Thanks again.
bye.